Welcome to the Crypto Ledger. What if I told you that by 2026, a massive wave of capital is predicted to shift from the ancient security of gold to the digital frontier of crypto? Today, we're breaking down a forecast that could literally rewrite the rules of investing.
So what are we really talking about here? This isn't just some minor market trend. No, analysts are forecasting a truly seismic shift in how investors store value. This is about the very definition of a safe haven being rewritten in real time, and it's all being driven by some deep macroeconomic forces and some pretty incredible tech innovation.
And at the heart of this whole story are two very different assets, right? On one side, you've got gold, tangible, physical, the store of value that's anchored portfolios for literally millennia. And on the other side, we have crypto, decentralized, digital, and yeah, known for its volatility, but also for its absolutely transformative potential. They are the two big contenders in this great reallocation.
Okay, so let's get right into the prediction itself. What exactly are analysts seeing on the horizon for 2026, and why is it such a huge deal?
The core forecast is this: a structural rotation of capital, moving away from the vaults of precious metals and flowing directly into digital assets. And look, we're not talking about small-time traders here. This is a fundamental strategy shift from the giants of finance, the folks who manage trillions of dollars. But to really understand where we're going, we first have to look back. Believe it or not, the stage for this massive shift was actually set last year, in 2025, during a pretty dramatic flight to safety. It all kicked off in early 2025, when crypto markets saw a sharp correction. We're talking major assets like Bitcoin and Ethereum falling by double digits. In response, capital fled to the perceived safety of precious metals. But as the year came to a close, the big picture, the macro picture, began to change, and the narrative started to pivot back towards digital assets.
And that flight to safety? Whoa, it was intense. Gold prices soared to an incredible $4,278 an ounce. It was such a clear signal that when markets get shaky, investors still default to the oldest safe haven in the book.
So what was behind this surge? Well, it was basically a perfect storm of factors. You had the Federal Reserve starting to cut rates, inflationary pressures were building up, and geopolitical tensions were running high. At the exact same time, the crypto world was dealing with a ton of regulatory uncertainty, which, made the stability of gold look incredibly attractive.
But that was 2025. The forecast for 2026 shows that pendulum swinging dramatically back in the other direction. This time, crypto is poised for a major, institutionally driven rally.
Now, a huge piece of this puzzle is regulation. According to Grayscale's outlook, the anticipated passage of clear bipartisan crypto legislation right here in the US is seen as a major catalyst. This could be the thing that finally opens the floodgates for digital assets to be fully integrated into mainstream finance.
And just consider the sheer scale of this institutional embrace. We're not talking about just a handful of new products here. Grayscale is forecasting over 100 crypto-linked ETFs launching in the US alone. That, my friends, is the kind of financial infrastructure that signals a truly maturing asset class.
And when you look at the price projections side by side, you can really see the dynamic at play. JPMorgan still sees gold hitting a strong $5,000 an ounce. But Grayscale? They're projecting Bitcoin will not only rally, but blow past its previous all-time highs. The growth potential is clearly tilting towards digital. So the big question is, what's fueling this dramatic reversal? What are the powerful currents pulling all of this capital from one asset class to another? We'll break down the three key forces next. But first, a quick thought for our community. Did you know that 80% of the people who watch our The Crypto Ledger videos are not subscribed? Please help us with your subscription to continue uploading more valuable information and reach more people.
All right, so let's pop the hood and get into the engine room of this massive shift. Analysts point to three core macroeconomic drivers that are pushing all this capital from the old world into the new.
These three drivers are Federal Reserve policy and how it affects something called real yields, the flow of institutional liquidity through new financial products, and of course, the ever-evolving geopolitical landscape. Let's break each one down.
First up, Fed policy. Now, when the Federal Reserve cuts interest rates, the real yield on investments like bonds, that's just your return after you factor in inflation, it shrinks. And suddenly, holding assets that don't pay a yield, like gold and crypto, becomes way more attractive. I mean, why own a bond that's losing to inflation when you can own a scarce asset? A weaker US dollar just pours fuel on that fire.
Second, you've got the institutional on-ramp. These new regulated products like spot ETFs, which directly hold crypto, are basically creating a safe and easy highway for big money to enter the space.
When giants like BlackRock and JPMorgan start tokenizing assets, it signals to everyone that the market is ready for the mainstream. All of this reduces volatility and makes crypto a viable option for even the largest portfolios.
And third, you can't ignore geopolitics. In a world with increasing US-China rivalry and just general fiscal uncertainty, investors are looking for assets that aren't tied to the policies of a single government. Crypto, and especially Bitcoin, is increasingly being seen as that hedge against the risks that are just built into traditional government-backed fiat currencies.
So after all that, what does this actually mean for investment strategy? How is the very definition of a safe haven asset changing right before our eyes?
The single most important takeaway here is that this isn't just another short-term speculative fad. This is a deep, structural shift. The very perception of where value resides is changing, and it's being driven by institutional adoption, regulatory clarity, and a totally different macroeconomic environment.
This really highlights the new balance investors are trying to strike. See, it's no longer about gold or crypto. It's about gold and crypto. Gold continues its classic role as the hedge against inflation. Meanwhile, crypto is emerging as a hedge against the entire government-backed currency system itself. They serve different, yet totally complementary purposes in a modern portfolio.
And what's really wild is that looking ahead, the lines between these two worlds are already starting to blur. We're seeing stablecoin issuers begin to explore gold-backed digital assets, effectively tokenizing physical gold. This kind of hybrid approach perfectly captures the transition that we're all witnessing.
Which leaves us with a final, fascinating question. As our financial system becomes more and more digital, more abstract, what does value truly mean? Is it a shiny rock we pull from the ground, or is it a line of code secured by a global network? The answer, it seems, is getting more complex every single day. The Crypto Ledger disclaimer. The information presented in this summary is for informational and educational purposes only. It does not constitute financial, investment, legal, or any other type of advice. The Crypto Ledger is not responsible for the decisions you make based on this content. Always conduct your own research and consult with a qualified professional before making any financial decision. Cryptocurrencies and digital assets are inherently volatile and carry a high level of risk.